Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, August 30th, 5:18 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend after yesterday's O'Neill follow-through day. You can see the trend gauge over here. We've upgraded market leaders to bullish with the green arrow. They did pretty well yesterday, outperformed the indexes today. 21 over 21 looks good. So does my universe list. Short term, also upgraded to bullish slash uptrend as all five of the major indexes have logged two closes above the short term 21-day moving average. Medium term, upgraded from I got to change this arrow and the font, but also upgraded from down to neutral as we've got the S&P and the NASDAQ above the 50-day moving average. Mid caps and small caps still lagging. Long term, all five of the major indexes above their 200-day moving average. So what happened today? After a follow-through day using the O'Neill discipline, the last thing you want to see is distribution in the early days after a day like that. And we didn't get any of that today. We had a flat open, early strength, right after that early strength, early weakness pulling back to flat, but then an upward bias for the rest of the day. I would qualify it as solid post follow-through day action. Indexes all closed green with an really an upward bias after that early morning or late morning shake, and leaders outperformed. So just what you want to see. Our 8 ETF growth composite, the RG8, up 0.44%. S&P 500 opened up 0.1%, rallied, as I said, pulled back to flat. This was all before lunchtime, and then late morning to early afternoon, an upward bias, and then some nice basing action into the close. Every time we tried to sell off, buyers came in, ended up 0.4%. NASDAQ 100, very similar action, up 0.56%. Dow up 0.1%. Mid caps up 0.2. Russell 2000 small caps up 0.4. Global 60/40 up 0.09. Bonds, global bonds lagged today. Global stocks lagged. U.S. stocks also. U.S. stocks make up over half of the world developed index, global index. So if you see that the world index did less than the S&P, the drag was by developed international stocks. In-house GROTECTION up 0.40% today. We'll hit the tail of the tape and charts of interest. Let's get right into the index charts. Here's your S&P 500. You can see, let's just review the action going back to 2 Fridays ago, where we basically stopped going down, line in the sand, right above that 7-layer burrito of support below 4,300. We bounced there. First bounce up into the 21 failed. That's kind of normal action. Harsh pullback and reversal on 824 after initially gapping up on NVIDIA. Looked like it might stick a nail in the coffin of the rally attempt off the bottom, but the next day market closed at the highs of the day, meaning then we made a lower low but closed at the highs of the day. So positive action. Next day, another attempt into the 21 where we stalled. Yesterday, out of nowhere, 10 o'clock JOLTS data comes out. It's what the Fed wants, and the market liked it, and we had a follow-through day. Light volume on leaderships, but on leading stocks. Light volume is typical this time of the year, the last week in August, heading into Labor Day, and then today, closing near the highs of the day. Like I said, solid day. Don't want to get too overexcited. This is really the fourth day up. So you got to keep that in mind. Risk increases after after 3 days up, but follow through day in there. Then we try to isolate low risk entry points. The lowest risk entry points really have been index related. There are a few buyable stocks at a low risk entry. Don't want to chase extended names. A lot of the Best names stayed extended and moved off the 21 over the before the follow through day action. So it's good to have leadership. We do have that. We don't want to chase extended stocks, though. That's a big temptation. But if it's not there, just take the index play until the leaders come into a more low risk entry point. That's the way we're doing it here at Revere. Let's go to the NASDAQ 100. Let's go to the 5-minute chart here so you can see what I was talking about by uh, the near flat open, early strength, and then really hard reversal. Looked like the market was um, just going to come apart. Didn't, bounced right at basically the flat line or negative on the day. Upward bias. Here's your base into the early afternoon. Little cup with the base, little handle hasn't broken out yet. Very similar on the S&P 500. Uh, Solid open sell off. Strength into this 45. So 45.21, 45.22, 45.19 are the three highs on the day. I know what people are saying. Hey, that's a head and shoulders pattern. Well, it's a head and shoulders pattern until it's not, and it didn't break the lows. We'll see what tomorrow brings. I wouldn't be surprised. Let's say I don't predict, but I have an expectation. Expectation is wouldn't be surprised if we pulled back to 4,500 or slightly below there, back into this range of the breakout day. But if we went below 44.80, I would consider that a bit of a disappointment to the downside. And not chasing is what we're focused on, really. So back to the daily. There's your S&P daily on the Nasdaq. Uh, Similar, you can see one thing that we want over the next couple of days, and we're shaping up like that, is the 21 to come back up through the 50-day moving average. Now that it stopped going down, multiple closes above it. And you can see we've got very oversold on the stochastic there. That was in line with the bottom and continuing higher off of there. Let's go to the Dow, the weakest of the big cap indexes. Still gave us two closes above the 50 and above the 21, fourth day off the bottom, bouncing at that 34,000 level. Relative weakness over the last week and a half after some nice relative strength for 5-6 weeks in a row. Let's look at mid caps. Second close above the 21, that's the green line. Got above close, basically barely above the 50-day moving average there. And IWM small caps ran into the 50-day. Second close above the 21, hasn't cleared that yet. We want to get back above this failed breakout level, this 189.24 off of this cup and handle pattern where we broke out before, failed the breakout, now coming back up the right side again. Let's clear today's high in the 190 level on small caps. Those are the 5 major indexes. Let's go to the VIX. VIX making a lower low, 4 days up in the market, 4 days down in the VIX, back below the 15 level, below the 21, now below the 50-day moving average. This is doing what you would expect it to do, what you would want it to do uh, in a rallying market. Below this 15 level is where we logged most of those gains during the June and July timeframe, got back above 15, and we've for most of August, we had a rough go of it in the market, but back below 15 to close the month. As of right now, one trading day left in the month. Let's go to the dollar. Dollar opened down, bounced off the 21. Let's go to a 5-minute very quickly. You can see the move down, slightly move higher today with the dollar, but not a lot going on with the dollar today. GLD up 0.25%, making a higher high off the low. GDX, gold and silver stocks, basically flat on the day, ran into the declining 50-day moving average and could not get over it. And silver with the big gap up last week and the follow through yesterday. Negative reversal today, down 0.6% on the day. Bitcoin, let's check that out after a big move up yesterday on the news of supposedly going to have an ETF approved any day now. A spot Bitcoin ETF, not futures. We already have the futures, which is what this is. BITO taking a little bit of a pullback down 2.7% today. Let's flip to bonds. The broad bond index traded in a tight range today, consolidating near the highs. Very similar action to yesterday, but finishing slightly down as opposed to the indexes for stocks. Um, Closing red or sorry green on the day. So that's the broad bond index. TLT is the long bond index. Again, tight range, consolidating at the top of yesterday's range. Not a lot going on with yields either. Here's the 10-year TNX, basically closing unchanged after this failed breakout. Well, it's right at the breakout level if you're considering 40, about 41 to be the breakout level, but second close below the 21 also. That's TNX. How about the long bond TYX? Mildly down today too. Second close below the 21 right at that 4.2 level. 41 was the breakout level there. So those are the inter-asset correlations that we hit. Let's go to the tail of the tape. Seeing a lot more green on here than red. That's a good thing. Stochastics are in our favor now. We had the hookup on the NASI McClellan Summation Index RSI. That's one of our secondary signals that we really pay a lot of attention to. Dollar overbought, pulling back, rates pulling back. All these are beneficial for stocks. We're off the bull case back, or off the bear case with yesterday's follow through day, onto the bull case. ADP jobs came out, and the jobs report, which is a preface to the NFP non-farm, or the government non-farm payrolls report on Friday. It showed fewer jobs added than were expected, and the market got a little bit of a pop on that pre-market. Tomorrow morning we've got inflation data, PCE data, and Friday we've got the government non-farm payroll. Day count, second up day after the follow-through day, yesterday being the first up day, 3 days above the ADMA, 2 above the 21 EMA. So expectations flip back to positive now with the follow-through day. Sectors, really not a lot of standouts one way or the other with sectors, kind of a mild range day, but oils, XLK, tech, which is basically Microsoft and Apple, uh, had the biggest gains of the spider sectors. IGV software, a good day. ITB home builders, a good day. On the downside, banks and utilities, along with the dollar. Mild down day on bond prices, mild up day on bond yields. So to the portfolio now. We bought Uber. Let's take a look at the Uber chart. Now I got stopped out of this last Friday with the close below, break below the 8, the 21, and the 50-day moving average. Strong stocks recover from setbacks, and we want to get back into this. We like the setup of it. This was just really a sort of a market event. It was down more than the market that day and closing the week negative. We punted it with the weak market, but follow through day yesterday, more follow through strength on Uber today. So we rebought that position that we sold last week. We also added to Tesla, got up to the 50-day, pulled back above the 50-day, closed basically right on the 50-day, but we added to our position yesterday, which we bought under 250. So those are the two names that we added to and or bought today. And then we added to SPXL again on the index strength. So this kicked our adjusted beta up to 1.35. We came into the week at 0.73. Didn't do any trades on Monday. Got off of our shorts, started adding on the follow through day yesterday, added more stuff today. So as a 1.35, our floor, as long as we're above the 50-day moving average, is a 1. That's our target floor. Excuse me. But the bottom line on the day, solid post follow through day action, mild index gains with an upward bias, and leadership outperforming. Good stuff. It's what the bulls want. We're always looking for the bear with the 2x4 hiding behind the counter or around the corner, though. All right, let's go to a couple different names from the focus list now. PDD. This is a Chinese retailer. We tend to shy away from China stocks, but you can't ignore the action here. Nice cup and handle, gap up on volume on an earnings report and a second day follow through with a well above average volume also. This is really a good looking setup and would have been bought if it wasn't a Chinese name because I don't trust the government over there, but we'll point it out anyway. Probably the number one China name. App plus China is really trying to stimulate their economy over there. They're pushing for banks and institutions to support their stock market. APP following through to the upside above 40. Celsius, probably the leading growth stock in the market, making higher highs after its earnings report. Good stuff there. AAOI, volatile. Volatility was to the upside today, up almost 8%. DraftKings, coming into football season, DraftKings had a really bad shake after this shakeout was started by when Penn rebranded by ESPN, and it was perceived as a big negative for DraftKings. It continued to sell off, finally put in a positive reversal candle around this 2650-ish level, which is corresponds to uh, an area over here of consolidation, and it's had a nice run since then. Not really any volume on it, but back above the 21 and the 50-day moving average. DraftKings making a comeback, and finally AXON, four straight up days also making a higher high after its gap up on earnings also. That's going to wrap it. Remember, of course, in the market, it's not how much you make, it's how much you can keep. We flipped back from how much you can keep to how much you can make now because the market changed its tone. We follow the direction of the market by tracking the indexes and the leading sectors and leading stocks. And we got the go signal basically yesterday with the follow through day, contrary to evidence that presents itself against that. The wind switches to being at our back, and we'll take low risk entries on leading stocks and increase our exposure, possibly through indexes or sector ETFs. That's going to wrap it. As always, love to hear from you. My email is don@revereasset.com. The phone is 855 Real Wealth. That's 855 732 5932. You can reach out to my partner, Dan Stewart, if you're interested in becoming a client. That's dan@revereasset.com. And with that, I will wrap up the video for Wednesday, August 30th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.